Hello everyone. Today we're going to have a brief market recap, then talk about today's IFO business indices, the weekly US oil inventory data, and the New Zealand CPI. This is Marshall Gittler out of Investment Research here at FXPRIMUS, bringing you my opening market comment. Well, the dollar is opening mixed in Europe today. It recovered against some currencies such as the yen, the Swiss franc, and the Australian dollar, but it was a little bit lower against sterling and the euro. U.S. yields, U.S. interest rates, and equities rose, with the S&P 500 moved further into record territory on yesterday's favorable U.S. data. Now, the euro firmed after yesterday's purchasing managers' indices beat expectations, especially the German one. Sterling was volatile, but it wound up gaining net-net after the UK Supreme Court ruled that the government doesn't need to consult with the regional authorities, only with Parliament. And the Australian dollar fell overnight on slower than expected inflation. Now, the best performing currency overnight was the Canadian dollar. It outperformed after President Trump gave the okay to build the long disputed Keystone Pipeline, which will bring Canadian crude oil into the U.S. A lot of traders have been expecting the Canadian dollar to collapse, just like the Mexican peso did, but it just hasn't. This news was the last straw, and a lot of them just threw in the towel. Capitulation trade. And finally, gold fell sharply as U.S. equities hit a record and U.S. interest rates rose. The yellow metal's relative attractiveness is fading in the face of other better performing assets. As for today, the European day starts off with the closely watched IFO business indices. And don't ask me to pronounce what IFO really stands for. Yesterday's German manufacturing PMI was expected to fall, but instead it surprised the market by rising strongly. Now, today's IFO indices are generally expected to rise, but still, given the magnitude of yesterday's rise in the PMI, they could still surprise on the upside. That might be bullish for the euro. The weekly U.S. oil inventory data will be released as usual. The market's expecting a rise in inventories of 2.25 million barrels, which is actually far below the usual seasonal pattern. Over the last 5 years, the average increase in inventories for this week has been 4.3 million barrels. The API reported overnight that inventories rose 2.93 million barrels. Overnight, we get the New Zealand fourth quarter CPI. The year-on-year rate's expected to leap from the extraordinarily low level of 0.4% back all the way to 1.2%, which would be back within the Reserve Bank of New Zealand's 1% to 3% target range. The first time in 2 years that it would be in the range. Now, the market's currently only pricing a very small chance of a rate hike in the first half of the year, but if this figure equals or beats estimates, the probability could rise further and the New Zealand dollar could firm up today. This is Marshall Gittler out of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.